Today I want to go over with you how I use Bollinger Bands in my trading systems, how I use them to set up my trades, monitor my trades, decide what are the best trades to get into and when to get into them. What you can see on my screen right now is my 21 EMA wave strategy. It's an indicator package I did in a previous video. If you're interested in it, you can look on the YouTube channel and find it, and it'll show you how to set this up and how I use it. I'm going to delete it here in just a minute in order to show you how to set up the Bollinger Bands in the way that I use those. I would ask that you like this video and subscribe to the channel. It lets me know what kind of videos you want to see in the future and get me to make more videos and more often. Please comment and also let me know any type of videos you'd like to see in the future. I use the TD Ameritrade system for my trading, but most of what you'll see me set up, you could set up on about any package. They're pretty standard indicators that I'm going to use. I'm going to go ahead and right click on the screen. And this will enable me, I'm going to the studies, edit studies, and I'm going to go ahead and just delete everything that's on the screen right now. I'll take all of that off, click apply. You see I just have a standard chart now behind it. What we're going to do is we're going to add the Bollinger Bands. I'm going to add them 3 times. Just click on it 3 different times to add them. Now what we're going to do is go in and edit each of the values on these. This will be my primary set. The top one, I'm going to use the standard deviation. I'm going to set to 1, to a -1, and a +1. I'm going to go ahead and leave the length at 20. A lot of times I'll use 21, but for this episode I'm just going to go ahead and leave it at 20. I'm going to change the color on this one on the midline, the lower band, and the upper band all to white. And I'm also going to change the width a little bit to make it a little bit easier to see. Change it to 2, click OK. Now I'm going to go ahead and set the second one up. And I'm going to leave it at 2 standard deviations on each of these. I'm going to change the color on this one to yellow. I'm going to change the way that it displays just for simplicity, and I'm going to change the width also. Again, I'm going to use yellow. Go ahead and change all of these. Width 2 and yellow. Click OK. And then we're going to go to the third one that we just set up. We're going to change the standard deviation on this one to -3 and 3. And then I'm also going to go ahead and change the way that it prints also, just so you can tell the difference a little easier. We'll set it to blue, I guess. Go through and change each of these. Make sure I get them set the same way so it doesn't confuse us. Once we get these set up, click OK, and we'll click Apply. Now I'm going to click OK to get this out of the way, and what you can see now is you have a mean line, which is right here, and I'm going to go ahead and make one other change on each of these. I'm going to go into back into Studies, Edit Studies, and we're going to make one other change, because I do not want the center line that you see right here. I don't want it printed on each one of these. So I'm going to go into this one, and the midline I'm going to take it off, and I'm going to go into this one, and the midline I'm going to take the show plot off on that. Click Apply. It looks a little bit cleaner, and I'm going to go back into the first one again, and I am going to change this midline to this dash here so that it's a little bit simpler to see where the midline is. There we go. Alright, the dotted midline is kind of the place that you would like to place your trades ideally. Your deviations here show how far away you're getting from this midline. The further away you are from the midline, the more likely you are for it to pull back. Typically, I look at the 2 standard deviation as a pullback point. So these yellow lines that we've set up, this is on the SPY, the L lines we've set up would show you areas where I would expect a pullback at the very least to the 1 standard deviation, but hopefully and more probable to this midline here. Midline can also help you determine the trend as you're watching the stock or whatever security you're trading bouncing off of this and going different directions. If it gets to the 3rd deviation, which is right here, then that's a real strong indicator you're going to get a pullback. Another thing that I use Bollinger Bands for is you look at the distance between the bands. And right here they're very narrow. And this means that the volatility is decreasing in this. So if you wanted to place a trade on this type right here in this area, you're probably better off trying to buy an option as opposed to selling one, because this is telling you that the implied volatility has decreased and the premium on your options has gone down. When you get these wider gaps between the two bands, here's where you would want to sell options: iron condors, credit spreads, things of that nature. And also, typically, where we've got the more narrow is where I would do a calendar or a debit spread. So there are other ways to find implied volatility, but this is one way graphically you can see it very easily, because you're going to get a spike in volatility as these bands expand from each other. And it's also good to note that these bands are going to want to come back together over time. And that's what you're going to watch for in your trading. Let's go ahead and pull up another security and take a look at it. Let's pull up Apple. And this one's all over the place. This will be a hard one to trade, especially right through here. But what you can see, if we come back to here, it had sold off. The bands have really increased here. The distance between them. It sold off. It's down to the 2 standard deviation here, and then it traded sideways, consolidated back into the 1 standard deviation line, dropped back down into the 2 standard deviation line here, and then it came back and started to move up again to the mean. When it's trading right in this area, that's a decision zone of it's got to decide which direction it's going to go, especially right here where it's changing direction. Here you can use it as a trend line almost, as it trades up to 2 standard deviations, trades back to 1 and into the mean. Then here you would want to go long and continue long up through here. And you could use it to move your stops up too if you wanted to use it for stops. I use a couple of different ways for stops. I use certainly the 21 EMA, or this is actually a 20 EMA here. I use the 20, and I also use just price zones. And I think price zones, support and resistance zones are very, very important, the horizontal ones. Trend lines I'll use just to help me get a look at what the overall stock is doing. And I'll do a video on trend lines later that shows you how I draw those. I have a specific way that I draw them. You can't just throw them out there. There are specific things you need to look for when you're drawing your trend lines. But the horizontal lines, where you're getting price support, where the price is bouncing off a lot in a certain area, like here, is also a good place to look at support and resistance and which directions the stock's going to go. Most recently you can see that Apple has been pushing the 2 and 3 standard deviation. This is a tough area to trade. I personally would certainly not buy here. If I were going to do anything, I would probably look at selling, credit spread up in here. Of course, if I'd done it right here, I would have lost on that trade. So I've got to know exactly where I want to sell it and then when my stop is. So if it's trading at 230 right here, I'd probably want to sell about a 240 credit spread based on what I'm seeing with the Bollinger Bands alone. And if it starts to hit this 240 right in here, then I would probably close the trade. Depending on how many days I sold it for here, I'd either close it at a small loss, or it's possible as it came up here and pulled back that I could have got out of it at a profit. But I definitely would not buy when any kind of security is touching the 2 and 3 standard deviation. It's very difficult for this right here to continue where it just shoots straight up. It's much more likely to go up and come back down. So what you would want to do is wait for it to come back at least to this line here, which is 1 standard deviation. Ideally, you'd want it to come here, which if you had waited for here, you would have got a great entry today, and then it shot back up for you, and you would have had a good short-term profit anyway. Let's go ahead and pull up another one just to keep looking at how this particular strategy works. and how the Bollinger Bands can tell you what's going on within a security. And here's Microsoft. We'll come back to here where this was an earnings where it had got up to 3 standard deviations. You have to be careful with the earnings because it could keep pushing up. What I would do here, if I were going to trade this one, I would probably waited to this candle and then perhaps sold a credit spread up here, or I could have shorted the stock under here with a stop in this area. Either of those in this particular trade would have worked out great. Here's another candlestick that would show you that it may be going to pull back. I do look at candlesticks when I'm trading. I do watch those, and they do determine some of how I trade. They're certainly very important, showing how the market is trading and what everybody's thinking about the stock. Right here you could have seen this as an up candle, but it probably would have. This jump here may have messed me up if I was trying to enter right here. Right here we're at 3 standard deviations. I'd be looking for a pullback. So I probably, if I were right here, I would have went short under here with a stop here. Probably would have got stopped out with no profit, or I would have sold a credit spread probably right around this area. Again, depending on how many days I may or may not have got stopped out. A lot of times when it touches my short strike, I'll look at closing it or rolling it. If I had held it, it certainly would have been fine. But you can see in this area where it's consolidating, the bands are contracting and it's trading, just bouncing off the one, primarily really the 1 standard deviation, I'm sorry, the 2 standard deviation here and the 1 standard deviation here, and it's just bouncing back and forth between them. If it wasn't for the fact that implied volatility is probably low right here, it'd be a great place to do an iron condor, but with the low implied volatility, you're not going to get a lot for it. So maybe you would do a calendar through here, but you're going to have to try to know which direction you're expecting it to go, or you could do even a diagonal, I guess, but I prefer a calendar with the low implied volatility. Or if I wanted to try to trade these candles, like right here, this was a sign that it might be getting strength again. This was another sign it was getting strength again, so you might go along here with a debit spread. You may or may not have got stopped out here, depending on where you put your stop. I would have put my stop around here, so I would have still been in it, and I probably have gotten out through here. So you can see how the Bollinger Bands can be used, how they expand and contract, and how you can tell where a good entry is based on how far away it is from this mean line. Again, the biggest thing I want you to take from this is don't buy right here. If you have to do something right here, I would come up here and sell a credit spread. You want to buy in between these 1 standard deviations is typically where your buy zone is. Here with it expanding, you'd have to be a little more careful, but still, if you're determined to buy Microsoft, this is not the place to buy it. This would have been the place to buy it. And those are the primary things, like I said, I want you to take when you look at Bollinger Bands, and this is how I use Bollinger Bands. If you have any questions, please put them in the comments below and let me know what you think of this trade or this strategy and how it works. And if you have any others you'd like me to look at, I'm going to be posting some others that I use. I use a number of different indicators when I trade. This is a nice one, and a lot of times I'll have different charts up at the same time using my EMA wave and then my Bollinger Bands. And I also use Keltner channel exactly the same way that I use Bollinger Bands. I may do a separate video on Keltner channel, but it works identical to the Bollinger Bands. It really just, do you prefer the Keltner channel or you prefer the Bollinger Bands? So not a big difference in how I use them. But please like this video, subscribe to the channel, let me know what you think. Thanks.